Good day, everybody. This is Dr. Mercado once again. Welcome back to Accounting 1329, Payroll and Business Tax Accounting. We are continuing with Chapter 5, which deals with unemployment compensation. And in this particular lecture, we are going to be covering problem 57A. Okay? A lot of information is included in this chapter, a lot of items that need to be excluded, included, some requirements. Please make sure that you read through all of the content in the chapter before you begin applying the information. I'm not asking you to memorize everything. I'm just asking you to read. That way, when you read information, the different scenarios or problems provided, you remember, hey, I remember reading something about this, about some exclusions, some things that should be included, not included, some calculations, some caps, some limits. So please make sure that you read. That way, you are familiar when you're actually working the problem. So let's jump over to problem 57A. Okay, problem 57A states, in April of the current year, Freeman Steel Company transferred Herb Porter from its factory in Nebraska to its plant in Michigan. So we have one employee, Herb, being transferred, same company, just different location. The company sued a tax rates based on its experience ratings are 3.2 in Nebraska and 3.8 in Michigan. Both states base the tax limit on the first $9,000 of each employee's earnings. Now, we need to remember, okay, for the federal unemployment tax, we will always pay taxes on the first $7,000 of earnings. This is for FUTA, okay? For the state unemployment tax, that amount will vary by state, okay? In the last example that we reviewed, both the SUTA and FUTA cap was 7,000, I'm sorry. In this example, FUTA will be 7. That never changes. FUTA will always be, we will pay FUTA taxes on the first $7,000. But in this case, the SUTA tax does change. The taxable earnings, we're going to pay taxes up to $9,000. Okay, so we're going to have two limits to be looking at, the FUTA and the SUTA cap. Okay. This year, Freeman Steel Company paid Herb Porter wages of $20,900. $2,800 were paid in Nebraska and the remainder in Michigan. Compute. So we're being asked to compute the amount of SUTA tax that the company must pay to Nebraska on Porter's wages, the amount of SUTA tax the company needs to pay Michigan on Porter's wages, and the amount of the net FUTA tax on Porter's wages. Okay? So, let's begin with letter A. The amount of the SUTA tax the company must pay to Nebraska on Porter paid wages. Okay, so we need to look. We know that Porter made $20,900. $2,800 of those were paid in Nebraska. So that is what we're calculating. So in Nebraska, the employee earned $2,800. You ask yourself, is that more than the cap of $9,000? Remember, we only pay SUTA taxes on the first $9,000 for Nebraska, okay, and Michigan. Both states have a cap of $9,000 for state unemployment purposes. Since the answer is no, $2,800 is less than the cap, we are going to say that the whole $2,800 are taxable for SUTA tax purposes. Now, my SUTA tax rate for Nebraska, according to the problem, is 3.2%. Okay, so we're going to go ahead and we're going to multiply that. 2,800 times 3.2%, and that's going to give me a SUTA tax of $89.60. Okay, and that is for Nebraska. Okay, now we're going to do the same thing but for Michigan. So I know that the employee earned $20,900 in total. I am going to subtract the $2,800 that are from Nebraska. So that means 20,900 minus 2,800. That means that 18,100 are taxable. Are wages earned in Michigan. Okay? So, that is the amount that we're going to calculate. Okay? Now, we know that even though Herb earned $18,100 in Michigan, we are only going to pay SUTA taxes on the first $9,000 of wages. Okay? But now we know that even though, how can I explain this? Even though the $18,100 of wages were earned in Michigan, we're not going to pay taxes on the whole amount. We have that cap of 9,000. Now, because this employee is in the same company, he just moved location. We already know that out of the $9,000 cap that we have, we know that we've already paid taxes, SUTA taxes on him on $2,800 of those wages. Okay? On those $2,800 that he earned in Nebraska, we've already contributed to Nebraska for those wages. So we are only going to pay taxes on $6,200. Okay? So, what do we do here? Well, I know that my employee, Herb, earned $20,900. $2,800 of those wages were earned in Nebraska, so that means that $18,100 were wages earned in Michigan. Okay? Remember, we pay taxes on the first $9,000 of each employee's earnings. Okay? So it doesn't matter that he worked in Michigan and Nebraska. We're only going to pay up to the first $9,000 of wages. So I know that my cap is $9,000. I know that I've already paid SUTA taxes on $2,800 for Nebraska. So that means that I'm only going to pay my taxes on $6,200. So I'm going to get $6,200. And I'm going to multiply that by my Michigan rate of 3.8%. So $6,200 times my 3.8% would give me $235.60. Okay. So what we did here is, because the employee is still working for the same company, we deducted the amount of taxes that were paid in another state, and we're only going to pay taxes on the difference of the $6,200. Okay. If the employer had left to a completely different company, then that would be a different story. That new company would have to start paying taxes from 0 all the way up to 9,000. Because it's a transfer, we're going to take into account those $2,800 that were paid in Nebraska, and we're going to deduct those from the amounts from Michigan. Okay. Now, for my FUTA tax, remember the FUTA tax is paid on the first $7,000 of earnings. FUTA is across all states the same amount, $7,000. So we only pay taxes on the first $7,000 of earnings. So we have Herb that work in the same company, just two different locations. We're only going to pay taxes on the first $7,000 of earnings. Okay, he did make $20,000, so we're going to pay taxes, FUTA taxes on the first $7,000. And my FUTA rate is 0.6%. That is obtained in the problem. So we're in the textbook, it explains about your FUTA rate. So we've got 7,000 times 0.6%, and that would give me a FUTA tax of $42. So to recap, we have SUTA and FUTA. FUTA is basically to administer the state and federal unemployment program. SUTA is where we actually put money into a trust account for when we have to pay unemployment. That is where we take the money out from. Okay. Now, for SUTA, the tax rates change by state. The limit, the maximum amount that we're going to pay taxes on changes by state. In figure 5.1, you're going to have a summary of all of the state unemployment compensation laws, okay, with the different rules by state. It also states whether, what is the taxable amount. For example, for Alabama, we're going to pay taxes on the first $8,000. For Alaska, we're going to pay taxes on the first $45,200. For Arkansas, on the first $10,000. So it changes. The state unemployment tax laws changed by state. We need to be familiar with that, where we can locate that information. Okay. Now, the federal unemployment is only assessed to the employer. The employer pockets out all of the FUTA tax expense. For SUTA, the employer also pays for SUTA, but there are some states that the employee also has to pay a state unemployment tax. Okay, for example, in Alaska, the employee pays 0.56% on the first $45,200 of earnings. In California, the employee must pay 1.1% on the first 145,600. So for the state unemployment tax, yes, the employer needs to pay, but there are some states where the employee also has to put in a contribution to it. Okay. Um, and just remember, the federal is on the first $7,000. That is across the board. That does not change. All states must pay federal unemployment tax on the first $7,000 of earnings. Okay. So please make sure that you read the content in the chapter, that you analyze the information being provided. That way you can apply this to the actual calculations. Okay. So these are our three requirements. We're going to pay $89.60 for the pseudo tax on Nebraska, $235.60 for the pseudo tax on Michigan, and $42 for the pseudo tax on the entire. The question is the amount of the net feudal tax on Porter's wages, all of his wages. He's going to pay 0.6% on the first $7,000 of earnings, and that will give you $42. Okay, fairly straightforward problem. Is just reading and applying the information on the textbook. Make sure that you look over all of the different information being provided so you can be able to interpret that and apply it to the problem. Okay, so that is basically it for this lecture. Questions, comments, please do not hesitate to contact me. If you like, please go to the CLE lab to see if they have any accounting tutors that might be able to assist you with some of these questions you might have. Okay, so that is it for this problem. Have a wonderful day, and until next time.